The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 21st, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, truly, that's something you and we've got to master each and every day. So let's begin our day with empowering beliefs. These are words of wisdom brought to us by our extraordinary producer, who certainly makes everything that each of us here at TFN and all the contributors seem so seamless. And I can assure you it is not. Now, the wonderful thing about Alberto, as I like to call him, the wonderful thing about Al is he starts his day with an incredible incantation. It's one that you should write down, that you should start your day with as well. Pass this on to all your friends and family members out there. He starts off by saying, hey, watch your thoughts, for they become words. And watch your words, for they become actions. But watch your actions, for they become your habits. And watch your habits, for they become your character. But more importantly, watch your character, for it becomes your destiny, folks. It is Wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Let's go check out these markets here. Dow up 129 points right now. She's trading out at 16,502. S&P up 11 points, trading out at 1884. Composite up 25 points, trading out at 4121. Russell 2000 up 8. Relatively, so you got the Dow up 0.8%, the Russell up 0.8%, S&P a little bit of a laggard, 6% to 0.6%, not a big deal. Composite up 0.6%. Apple struggling just a bit here this morning off $1.21. I believe that broke above a resistance level yesterday. Leading the charge dollar-wise, the upside dollar-wise is Netflix. Right behind them is Tiffany. They're up both about $7.30 back and forth. Kiwi PLC up $5. Google up $5. Now Inc. DNOW-I. That's up 13%. I wonder if that is a IPO. I can't tell here off my screen. Amazon's up 370. Greenbrier Companies out there. It's up 6%. Greenbrier. I wonder if that's there's a hotel. So I wonder if that's the same company out here. Let's see. Greenbrier Companies design, manufacture, markets, railroad. No, I would say that is not the Greenbrier Hotel. But what they do is they're a manufacturer of freight cars in North America and Europe out here. It is up nicely. Let me see if they announced they got an order for 7,000 new railroad cars valued at over $700 million. Maybe that is fueling their fire out there. Goldman Sachs, that's up 2% this morning. Intercept Pharmaceuticals, of course, that's up and down every other day. PetSmart, though, that happens to be down this morning, down about $3 right now, off about a little over 4.5%. Booz Allen Hamilton struggling this morning off about 10%, down $2.30 out here. Salesforce.com off 3% off $1.65. Digital Realty DLR off $1.50. Intuit's off $1.50. Hormel Foods. I like that Hormel chili out of a can every now and then, just as maybe a good hangover food out there. I don't know if Hormel chili's really good hangover food, but a taco most certainly is. Not that I've ever done that. I've just heard. So it's down about 2% off $1.50, trade out at 75.32. Our call number is 877-927-6648. Feel free to give me a call. Happy to take a look at your stock chart as well. Oh, so Terry says that they are the silent partner behind that Greenbrier Resort. Thank you very much. So Terry's in the know out there. I have not had a chance to go visit the Greenbrier, but, man, it sure looks nice. I think we ought to do a show from the Greenbrier out there. We ought to talk to them about bringing everybody from TFNN up there will all go hang out and party at the Greenbrier. And, of course, one of the reasons I'd like to do that, not just because it's a beautiful facility, but I think I'd like to play a little bit of golf up there. In any event, let's go take a look at what's going on inside the market here. Let's start off, take a look at the New York Stock Exchange. Now, I don't have the summation index and the oscillators updated here. I got to do all that manually, and I just haven't gotten to it. So please excuse me for that. What I can tell you about the summation index inside the New York Stock Exchange is pointed down as we speak right now. So that much I do know. It is with regard to the bulls. In order for the bulls to take control today, let's talk about that, because you've got the market. The Dow's up 129 points. In order for that to occur, what we would need is 1,635 net advancing issues. What you've got so far this morning is 1,341. So advancers leading decliners at the moment. We're talking, 10-12 out here. You've got about a 3-to-1 ratio. You need a little bit more than 3-to-1 ratio in order for the bulls to take control. Now, even if they could get to that, what the NYSE has to do, it's got to deal with that island reversal out there. And that's really where I expect that if we take a look at the last island reversal, that's wonderful. I just deleted that, but let me delete. Okay, we can go ahead and put that back in here. The last island reversal that took place inside of the New York Stock Exchange. That took place right here. Well, actually, you can blow it up. Forget about where the heading is. It was on December 31st. December 31st, if we take a look at the high of December 30th, it was 10,361.37. 10,361.37. The low, 10,366.58 on December 31st. And then we came back on January 2nd, created a little bit of an island out there. Now, the ferry boat didn't really set sail from that island. It just kind of was in port, so to speak, and came back, picked up some passengers off that island back on the January 15th, the January 21st level. And then it went ahead and gave way, and price moved down to the 200-day exponential moving average. Look, if price breaks below, there's a couple of places where price has to break below inside the New York Stock Exchange. But right now, just really traveling sideways. Whether it closes the gap on this island or not, I don't know. The New York Stock Exchange, for all intents and purposes right now, is still bearish out there with that island reversal. It's got there's some fighting between the bulls and the bears. There will be, at least, if price ever can get through the 50-day exponential moving average, and that would be where that hammer candle in the last breakout session took place inside of the New York Stock Exchange, and that is on the April 16th area. The low there is 10,435, and the high of the hammer candle is 10,407. So far, damage is pretty well contained with inside the wider swath of the marketplace out here as we speak right now. Not really much different than what we saw as the markets were making all-time highs back on December 31st inside of the New York Stock Exchange as well. So we may have a similar little bit of a sideways pattern that is forming here before all heck breaks loose. And, of course, if all heck doesn't break loose, what that says is if the New York Stock Exchange can close above 10,725, probably a real significant rally would unfold. That is the high of the trading session from May 13th out there. So that's what's going on inside of the New York Stock Exchange. I'm going to switch back to the futures contracts for those of you that just simply listen in on the first hour as well. The reason being is that we were able to really identify good areas of resistance. Resistance, you want to identify those areas because if price can break above it, old resistance becomes what? Becomes new support out here. Well, inside of the Dow, which was the truly weak link here yesterday, and we've seen a nice bounce back thus far. What it still hasn't done, and the candle that it was dealing with out there yesterday is the same candle that it's dealing with right now today. And so if you were wondering where are the sellers hanging out inside of the Dow, it's about as easy to spot as fish in a small bucket. I guess. I don't know. I've never really seen fish in a small bucket out here. But it's pretty easy to spot on a stock chart out here. And that's at the 16,488 area. And that is a level that is being defended by the sellers out here. And if the bulls, if the buyers are really going to overcome the sellers, they're going to have to get above that range. And they certainly are not in an overbought condition. So using the relative strength indicator on 120-minute time frame, they can most certainly do that. And if not, then expect the battle to ensue and expect to see some selling pressure and price to, move back down. But a nice wide-ranging bar coming in there, just like we've had two wide-ranging bars to the downside out here. Now, your question is, I believe, I could hear somebody saying, well, gee, Steve, what happens if price does get above that? What happens if the bulls can, in fact, overcome that selling position out here? Where is price likely to move to? Well, then we'd have to go take a look at Leonardo Fibonacci de Pisa, and he would say, Steve-O, that's an excellent question. I'd have to say probably 16,612 out there. He'd say, hey, not my .618 retracement, which is 16,547, but if the bulls are able to muster up enough strength to get through that area, you're probably looking at the 16,612 range for the next reversal area or next area of real resistance inside of the Dow. And that's taking a look at that 120-minute time frame. So as we speak right now, we can see why his price stopped where it is. Well, because that's real resistance. If we take a look at the ES Mini, the 30-minute chart out here, there is a trend line price is trying to deal with. Now, what's nice about the 30-minute chart out here is, we got a shorter-term time frame, but it's really getting into that extreme overbought condition. Now, not that it can't stay in an overbought condition for a period of time. It managed to do so back at about 10:30 in the morning on May 12th. And it was able to stay in that range up until about the time frame of 10 o'clock at night. 10 o'clock at night on May the 12th out there. So, it most certainly can do that. Then, of course, the top was put in on the 30-minute chart here with a higher high with less relative strength, and that went ahead and set up the cascade. In fact, that's the trend line that we are using out here because it was a price relative strength divergent level as well. So that's what's going on inside the ES Mini as we speak right now. Quick peek in on the other weak link in the market, or supposed weak link on the market, and that is the Russell 2000. And it is up above its resistance area of a longer term on the 120-minute chart, a descending price channel. But the reality is, let's go take a look at the daily chart, right? Daily's going to trump 120-minute charts all day long. So let's go take a look at the daily chart here for the Russell 2000. You can see the real key level of resistance. It's probably up around the price point of around the 11. Today it would be right around 11.10, 11.11, somewhere right around that area. Price has really been well contained with the exception of really two trading sessions, one being April 2nd and the other where it closed slightly above it back on May 12th, but price came right back inside there. A real breakout, a real rally inside the market will likely come from a signal inside of the Russell 2000. Because the NASDAQ itself, we'll take a look at that here maybe after the break. But if we do take a look at the Russell 2000, the real resistance here is the top of this descending price channel. And a break above that, price moving back to test it and then staying out, that would be a real break in the market. So right now, Dow's up 128. We've got markets that trade both ways each and every day out there. It is a short-term trader's paradise. It's a headache for basically everybody else. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 125. S&P is up 10. And let's go up to one of our favorite cities. Let's go up to Philadelphia to our man, John. John, thanks for calling. Thanks for holding. How you doing this morning?
Steve, I'm very well. Listen, thanks for taking the call, sir.
My pleasure. Always good to hear your voice and get your thoughts. You wanted to take kind of break apart the Qs, I believe. So I've got the chart of the Qs up on my screen. Tell me how I can assist you, or tell me what you're looking at.
Steve, actually, I was listening to your first segment here in this most recent hour.
Yes.
And what you said just when you wrapped up before going to break prompted a thought of mine. Namely, you said for traders, there have been opportunities thus far this year.
Yes.
But for everybody else, it's been a headache.
Yes.
And in fact, I just went quickly through some numbers, and I looked year to date. The S&P 500 is up 2% year to date.
Yes.
The NASDAQ Composite is down 1%. The New York Stock Exchange Composite up 2%. The Dow is flat. And the Wilshire 5000, which is, in effect, all U.S. stocks, is up 1%. So there's nothing with the buy and hold, at least year to date. And I'm looking for clues to try to answer the question where the next sizable move in U.S. stocks generally occurs. Now, trying to answer the question when, of course, is incredibly difficult, so I'm going to try to bisect and dissect it and first ask the question, which way is the next sizable move of greater than, say, 5 or 10%? Anyway, that question is on my mind, And we know year to date we've had good volatility in the NASDAQ stocks as a group, and some individual stocks, some very big volatility. We came into the year having the NASDAQ stocks being quite extended, having outperformed very strongly versus everything else in 2013.
Yes.
Good sell-off on April 15th, and now we recovered. And, Steve, I'm looking at 4 big NASDAQ stocks that all were incredible performers through 2012 and 13, all of which pulled back very decisively into April, and now have either bounced or doing something since. And those 4 are Amazon, Facebook, Gilead, and Google.
Yes.
And I'm wondering, when you look at those 4 charts, are you seeing anything definitive in either of those individually or collectively that might give us a clue as to answering the question which way the QQQs are likely to go in terms of a 5 or 10% move?
Okay. So let me start answering that question, at least with regard to what I see on the charts themselves, by taking a look at the larger picture. And when I take a look at the larger picture, John, what I'm just simply pulling up is the monthly chart for the composite. And what I know about the composite, what I'm sharing with everybody else, what I know about the composite is it happens to have a cycle pattern where it makes it doesn't always have to be a swing point, but on this cycle pattern, it makes a significant higher low, usually within the month, if not right on the month. And it is a 11-month cycle. And where I begin with, John, is I begin coming all the way back to the time period of September of 2000 out there. So I'm not using the top that occurred in March of 2000, but for some reason, and I don't know how this works, if we start with the October of 2000 out there is my first level, and if I move over, because I have this little cycle tool, to the lows that were put in on September of 2002 out there, and then I just continue to use that same cycle. What happens in the composite, it tends to make because it did it again in August of 2004, the next 11-month cycle out there. Is that 11 months? I don't know how many months. Maybe it's more than 11 months out there. So I'm giving the cycle time frames. The next one took place in July of 2006, and that marked as a low out there. The next one took place during the month of July in 2008. Well, the cycle actual pattern really completed in June of 2008. That ended up being a high. There was a low that was put in June of 2010, and the most recent one was May of 2012 out here as the market May to June, where it was putting in a low. And what I know is that next cycle pattern. That next cycle pattern just completed here in April. Can you stay on hold, John?
I sure can, Steve. Thank you.
Okay, so we'll be right back with John. We're going to go pick apart the composite. We're going to focus in on the Qs, the NDX, 4 specific stocks. But we're first just taking a look at this specific cycle pattern that seems to continue to repeat as a larger clue as to what might happen. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 133. S&P is up 11 right now. We're on the line with our man John in Philly. We're taking a look at the Qs. We're trying to in a market that really hasn't moved much for the last 5.5 months now, percentage-wise, trying to figure out where the next large move might come from. And we went back and we began by taking a look at a monthly chart for the NASDAQ composite. And I was wrong. It wasn't an 11-month cycle, John, a 23-month cycle out there. And for whatever reason, it works. And that last cycle time period just came in. And that says that April or May becomes really important. And so I'm open to the opportunity that it could be a low too, that has actually come in. And because what we don't have here on the longer term time frame when it comes to the composite is in my opinion, is really a sell pattern that I've been able to identify. In other words, I don't really have, I like to see these tops have these price relative strength divergence. What we've seen here is on a monthly basis, as you pointed out, the NASDAQ was on fire. It was an extreme extreme overbought condition. And the market, the composites really just kind of worked off sideways to a little bit lower to work off that condition. It did tag the swing point low from March 31st of 2000, which was 43.55.69, and it got into that and rejected that on March 31st of 2014. If prices closed inside there, I'd say, well, then like anything else, it should go test the high. So the bottom of that swing point's been tested. Now, to your other question of going back and taking a look at the individual stocks inside of the NDX 100, or not, you would take a look, you had identified Facebook as one. So Facebook here, what I see in Facebook, if we just simply use some trend lines out here, and I know that on occasion you use trend lines to take a look at, where prices contained within. And if I take a look at Facebook, what Facebook did was it came down to, moved back into a breakout area with light volume. And it broke out on the trading session of January 30th, did it with 150 million shares, and came back into that area with 107 million shares back on April 28th. And now what we've seen Facebook try to do is it's trying to break a descending trend line out here. If we were to see if Facebook were to get any kind of volume going and it could get above the April 24th swing point, and I'd say it wants to go back and revisit the highs out here, but it has to get above 63, 65. I don't care if it's broken the trend line or not out there. And, it's going to take a bit of volume to get through that high. But it has broken a trend line, and price did come back to support. What it doesn't have is another sign of strength off of this low area out here. And that's what I see on Facebook. Is there something else that you see on Facebook specifically?
I don't, Steve. I find it very helpful. I'm in the Tiger's Den, and I'm looking at your 4 daily charts, Facebook, Google, Amazon, and Gilead, and seeing them all together is very helpful, and hearing your thoughts on those 4 is terrific. So thanks.
Yeah. In the case of Google, what Google's done, now Google has this unusual characteristic. It's one of the most tradable patterns that is out there, which is right around earnings time frame, and that typically the earnings sets the price levels for the next several weeks, if not all the way up until earnings out here. But what Google has done is it came back and it tested a hammer candle that was formed at the low on April 28th out there, and that low was 511 even, 3.7 million shares, and that was tested with 3 million shares. So the hammer candles held that support, as well as a breakout that takes you back to October 18th, and all that's been on light volume, and it too has broken a trend. So shorter term, the trend here on these 2 stocks have been broken. That says being long the Qs, if you were going to use those as a guideline, would be, something would be the signal it would be sending. Gilead's made a V-shaped bottom out here. And what's interesting about Gilead is if you go all the way back to the lows in July of 2012, price in essence just came back and visited a long-term trend line. So it came all the way to the long-term trend line, got there, tested it, rejected it, and now it's formed a little V-shape rebound. And it has a sign of strength in it, where the other ones don't just yet. It's got a nice sign of strength on April 23rd. So that's what that one is showing. And then the last one out here, Amazon, Amazon still has work to be done to the downside, I think. Just like I think Amazon maybe more than likely follows the Gilead chart and comes down and tests its long-term trend line, which takes you back into the 2008 time period, because that would be a 1 to 1.618 A to B equals CD, and oftentimes that's the extent of a move. So I think Amazon probably has more work to be done to the downside. But when I take a look at those 4 charts, that's really what I'm seeing. But I'm also interested in hearing what you're seeing on those 4 charts too.
Steve, I appreciate you going through all that. That's terrific. And that 23-month cycle, that static cycle that you've identified in the NASDAQ composite, that is potentially eye-opening. Let me just ask a final question.
Yeah.
With the NASDAQ composite having peaked, in the first quarter, declined at 10%-ish, do you think there's a reasonable shot that April 15th low was a bottom, and in time, whether right away or some months out, that the NASDAQ composite races on to higher highs?
I will. The way that I believe that happens, the clue here, and what's actually kind of nice about the market when I take a look at where we're at in answering that question, and what you did when you did the math on it to point out really where we're at in the market, we're so close to the highs, let's say in the New York Stock Exchange, inside the Wilshire, like you were talking about. If the island reversal pattern inside the NYSE gets taken out, then the answer to your question is yes. or what we at least have here is a summer rally that people don't expect. And what could really fuel that summer rally is the Euro Japanese yen. You know, I take a look at what's going on the daily chart. When I put that together, the Euro Japanese yen, it's trying to make a 0.786 Gartley buy pattern. And because my belief is that this currency pair is the carry trade for the markets and is the liquidity gauge of the market, you know, it could actually form a hammer candle today. We could see that reversal signal and this pattern actually complete today inside of the Euro-Japanese yen. I don't know if it will or it won't, but on the daily picture of this currency pair, and then I go take a look at the weekly currency, I take a look at the currency trade, is that price actually came back to an old area of resistance that now is acting as support, and it's this red horizontal line coming across my screen. And so to answer your question, could there be a low in there? This has to hold, both that 0.786 Gartley pattern on the daily, as well as this resistance line, or now support line, inside of the weekly chart. And if those areas hold, then at a minimum, it says we could see what everybody's really, I guess, not looking for, I suppose, which is a nice summertime rally in this 6-month unseasonal cycle. But what I do know is the facts that we have, and those are all potentials. What I do know is, as we have discussed before, all markets do not top on the same day. And what we do have inside the markets is we do have synergies now that are similar to 2007 and 2000, in that we now have the Russell and NDX and Composite that topped on March 6th, and the Dow, S&P, and New York Stock Exchange each on May 13th. And until those highs are taken out, I would have to say the preponderance of evidence being in this 6-month unseasonal cycles, we're more likely to see a move lower than we are higher. But that currency pair is a thing that has me really on guard out there. So I don't like to be wishy-washy, but I've got to take a look at all the pieces of information out there and then make a decision.
Steve, that discussion, this has been terrific. Reviewed a lot. Appreciate it. I think I'm a little bit better prepared, so appreciate your time, sir.
Hey, my pleasure, and thanks so much for calling. That was John in Philly, and I had an email from a listener during the last show or what have you, and it was specifically with regard to the Euro-Japanese yen, and I don't know if I got an email back from him out here, but what he was pointing out on the Euro-Japanese yen. I don't see an email back from him. He was pointing out on the Euro-Japanese yen. Let me see if I can maybe even answer the question. He was pointing out that if you're watching the chart out here on Tiger TV, you're going to see a blue and a red squiggly line. Those are moving averages. Now, he was pointing out that he has used a 10-week and a 30-week. And I'm assuming that he was using a weekly chart when he was taking a look at it. Otherwise, it's just a 10-period and a 30-period moving average. So I've got the weekly chart, and it's got a 10-a-week. Now, I'm using the exponential moving average, but what I want to do here is I want to go ahead in here, and let's just change them to simple moving averages, because he has noticed that in using these moving averages, well, first let's close this up here. Let's say you were one to use the exponential moving average, which are, again, lagging indicators out here. But what he's saying is, in essence, as opposed to using a 50 and a 200-day, more normally associated with the death cross and the golden cross, in this case here, he's found the use of the 10 and 30 to be very successful and an aid to his trading out here. Well, if we use the 10 and 30, and no problem doing that, if we take a look at that, this had a nice golden cross on the Euro-Japanese yen back in November of 2012. So how useful would that have been to us with regard to this currency pair, the markets, and so forth? I'd have to say really helpful out there. So thanks. But I don't know that he's using the exponential. Likewise, there's a death cross back here, back in 2011, in July of 2011. Again, a lagging indicator. You're not going to ever catch the high. You're not going to catch the low. But how would that have helped you out back in that time frame, especially if you were just simply trading this currency pair? But because of its correlation to the stock market out here. Now, real quickly, what I can do, I should be able to do this, is just change those to a simple moving average, because my chart wasn't really lining up with his, and during the show I'm multitasking. It's hard for me to read an email thoroughly and see what, especially was it because it was a different charting system that was being used. So now, even if I use a simple moving average, I don't have because he was suggesting that the 10 had crossed through the 30 as we speak right now, and I don't see that. So on my weekly chart, if I'm going to keep things consistent with 10 and 30s, the weekly chart is still in strong bullish mode, and that's why I, suggested to John, I can absolutely make the case that what we're going to see at a minimum is a summer rally that people just simply don't expect. Most people don't expect out there. So, in any event, let's go to Rich in Orlando. Rich, thanks for calling. Thanks for holding. How you doing this morning?
Yourself.
I am doing great. Thanks so much for asking. Appreciate that. You want to take a look at Silver Wheaton, I think?
Yes, that's LW.
Yes. Tell me what you're doing, how I can assist you.
Well, I'm looking for an entry. I mean, it looks like it's kind of building a base here, but I guess I'm a little concerned that if the market does get nailed here, it's probably susceptible with everything else.
Yeah.
And just looking for your thoughts.
Well, if we take a look at Silver Wheaton, and let's look at it from 4 different time periods. And first, we'll use the e-signal charts, and we'll use the TAS signal box indicator out here as places of support and resistance. Right now, a key level on a weekly chart, for example, this week, you would like to see Silver Wheaton get back above $21.55. Right now, it's trading at $21.50. Does that 5 cents make a difference? Yeah, on the weekly chart, it's saying it makes a difference because if you're trading below that on the weekly time frame, it's saying don't be long. You're not in a long position here. And last week, it closed below that what's referred to as that unfair low market profile. Now, there's some support out here, not too far down, maybe around 21 level. But I have to say, if you were to see price close below that area, that would spell trouble for Silver Wheaton out here, and probably would be setting up a to B equals C down. I'd have to say it probably trades into the hammer candle from June 24th, 2013, which could take you anywhere from $17.75 to $20 out there. So the monthly chart here is not, there's no bullish reversal signal. You're trading just slightly below a market profile, which says don't be long. That's with the longer-term time frame. The daily chart is saying, hey, you can't be long here because it too is below. Price right now is below its market profile, which is 21.58. So what's nice about the signal box, the market profiles here, when we take a look at longer term, is that we now have a weekly and a daily basically lining up with each other. And I would throw out to you, Rich, that when you have those levels lining up with each other, because they don't always do that, that really becomes strong areas of support or resistance, or areas to be long or versus areas to be short here. So you really haven't gotten the so-called long signal on the daily and or the weekly. Now, from an intraday time period, we're seeing a bit of a bounce with it trading at 21.51. That's on the 120-minute time frame. The 120-minute time frame says 21.52 is resistance. So the question is, can it get above that area? And just lastly, I'll use the 4-hour chart up here. I'll put the 240-minute chart. And so on the 240-minute chart, it is at least above support. It says this could actually bounce all the way to 21.90. We'll finish this up if you can hold on through the break. We'll come back and give you my conclusion on Silver Wheaton. All right, Rich?
Sure, no problem. Thank you.
Absolutely. We'll be back to Rich in just a moment when we get back from this commercial break out here. Dow is up 138. S&P is up 12. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 136. S&P is up 11. We're going out to sunny Orlando, Florida, to our man Rich. We're taking a look at silver wheaten out here. So, Rich, so now did it help to take a look at those market profile areas on the longer term?
Very much.
And is there anything that I shared with you during that you know it lines up with what you're thinking, or something that you've got a question on before we pursue it a little further?
Well, it would have been. I would have thought here that it would have been positive that it seemed like we had supported this 2124, but. From what you're indicating, if it goes down to the 2120, breaks the 2120, 21.
Yeah.
Then, to be honest, I was anticipating, support at the 24. So that was kind of, eye-opening that way.
Okay. So one of the chart I've got on my screen here right now is of gold, so it's not of silver. And we'll take a look at that momentarily. But the red squiggly line is that's the U.S. dollar index. I got the wrong chart up on my screen. So sorry about that. Meant to pull up I'll pull up the GDX. That's what I want to pull up the GDX, and then the red line happens to be gold. So silver's a part of the GDX out here. And what I know is that these two, it's just like a beautiful tango out there. I mean, these things are in tandem. And so gold has got to give us a breakout signal. In order for any of these equities to really move. Now, does it have to? No, of course, it's silver, but it really needs to give us some type of breakout signal. And the problem with the gold right now is your better potential trade in trying to find some bottom would be gold to get down and maybe test the bottom of this little consolidation box that it's in, which could be just testing that April 1st swing point low of 1277.40 or 1289. So your better time to maybe come in, if it happens to be during the market hours when silver wheaton is trading, would be as price gets down to 1277.40 and rejects that area, or maybe it's the bottom of the box down at 1268. But what I can say is if I were in a silver wheaton trade, and gold were to break 1277.40, I would just get out of Dodge. I would not want to be holding. I would not want to be holding mining equities, knowing that that if gold breaks that area, it would be breaking the back of the bulls that each time down there has been able to hold. Likewise, if it holds, then you may have bought a bottom. No, silver wheaton has a average true range of 43 cents. So whatever. Should you enter the stock, you've got to at least give it that much leeway in price. And I would recommend 1.272 or 1.618 expansion of that stop, and then just simply adjust your position size. So I'd use a wider stop on the initial trade. You tighten things up if it moves in your direction, and maybe add to a position, something along those lines. But in order for silver wheaton and any of these mining equities to take off topside, it's going to need gold to move. It's going to need gold to move higher too. So
you're saying that gold would really be the barometer that you really want to keep your eye on. And if it breaks that level, then you want to be out. You would want to be in anything at 1277 area.
I wouldn't because that 1277. The bulls have really defended that well, and if they can't defend it, to me, that sends a pretty loud message. And the message is gold probably gets down to 1186 really fast, or 1217 really. Look, I don't know if that happens or not.
Right.
But I say, the bulls are gone. They've decided they're on lunch, and, they're not going to get back in time to defend their position. That says, I'm going to come all the way back down to December 31st. Which is right around 1181 to 1214 out there. So right now what we know is the bulls are at work defending that area. I hope that really helps you out.
Yeah, it actually does. Thank you very much, Steve. Have a good day.
You bet. Thanks so much for calling. Folks, stay tuned. Our man Basil Chapman is up next. He's going to tell you where things are at in the Chapman wave. Dow's up 150. S&P is up 13 or 12. Have a great trading session. I look forward to seeing you tomorrow morning. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.